Derek Wilder.
And I'm Blake Veerling.
And tonight on Channel Dinero, we have a really good special on money creation and the banking system. We'll go over such topics as money, U.S. money supply, and the banking system.
Blaine Simmons will be with us telling us what money is, medium of exchange, unit of account, and store of value.
Out to you, Blaine.
Thanks, Blake and Derek. Blaine Simmons here live with Channel Dinero. I'm here at Texas Chi Omega College University and excuse me sir, I'm actually here to interview people about the banking system. Would you like to give it a try?
Sure.
Alright, good. Let me first ask you, what is money? How would you describe money?
Money is, you work for money, and
Yes.
when you get money, you are able to buy stuff and spend money. It's paper,
Yes.
and there's coins. That's money.
Well, the definition of money is the assets in the economy that people regularly use to purchase goods and services from other people. But you're close on that one.
That was pretty good.
Yeah. What about currency? Do you know what currency is?
When you're swimming in the ocean, there's like red flags and yellow flags, and when it's a red flag day, it means the ocean's currency is too high.
No, not current. Not current,
Oh.
sir. No. Currency is, each country has its own system money that we call currency. Some examples are, for the US, the US dollar, Canada, Canadian dollar, Mexico, peso, and Japan, yen. But not current. That's currency right there. How about we try a medium of exchange?
Well, medium is like, there's different sizes of things, and medium is one of them. Because like when I work out, I like to wear a medium shirt so I show off my big muscles to all the really hot girls here. And then exchanging something is like, I don't really know what exchanging something is. So I don't know.
Well, to fill you in, first, money is a medium of exchange. It is something that people are willing to accept in the payment for goods and services. Without a medium of exchange, people would have to trade their goods and services already for other goods and services. What about bartering? Have you heard of that term, sir?
Bartering?
Bartering, yes.
No, but on The Simpsons, there's a guy named Bart, and I have a feeling that bartering has to do with Bart Simpson.
Well, I'm sure in the show he does barter, because bartering is also known as trading. It's inefficient because you can spend days running around looking for someone who has what you want and wants you to have. But, you haven't come close with either of those, so why don't we move on to unit of account? When you hear that, what comes to mind?
Unit of account. This is a tough one, I think. Well, in my old math classes, I learned about units. There are different types of units.
Mm-hmm.
So, unit of account would be, in math terms, the unit that accounts for the number.
Close. It does have something to do with math. The second function of money is that it serves as a unit of account. It's people state the prices of goods and services in terms of money, such as those pair of pants could cost $20, and those sunglasses could cost $5. But now that we're talking about unit of accounts, what about store of value?
Store of value. You can go to different stores to buy things, and value is like how much it actually costs. So to buy a store, you need its value.
Not quite. This is the third function of money. People can save money and then use it to make purchases in the future. It helps us appreciate how severe and prolonged inflation can weaken an economy. Now that we've gone through those, we're going to head to a commercial break.
We're back. We just had Blaine Simmons interview the smartest college kid I know. Now we have Blaine Simmons with an interview of a banker, millionaire. Blaine?
Thank you, Derek. Here with a billionaire himself. He'd like to remain anonymous, but he's going to explain the U.S. money supply system for us. Could you start off telling us what paper money is, please?
Well, Federal Reserve notes, also known as paper money, make up all of the paper money issued in the United States today. Each note has a letter, number, and seal.
Very interesting.
It costs 4 cents to produce all of it. There are also 7 denominations of money. There's the $1 bill, $2 bill, $5 bill, $10 bill, 20, 50, and 100. Banks send old, worn, torn, or soiled notes to the Federal Reserve Bank to be exchanged. Money is sorted into fit or unfit categories. Fit, which is also known as reusable money, is stored in their values until it goes out again through the commercial banking system. Unfit money is shredded and burned.
Thank you for that. Now, can we move to checking accounts? What's going on with that?
Of course. Checking accounts. The money balances you have in your checking account can be used to purchase goods, services, and pay debts, or it can be retained for future use. With a checking account, you use checks to withdraw money from the account that you have deposited in it. You are able to withdraw or deposit funds at an automatic teller machine, also known as the ATM machine, and to pay for purchases at stores with your ATM card. Some checking accounts pay interest and others don't. A regular checking account or demand deposit account does not pay interest. The money in the account is available to the account holder on demand by writing a check, withdrawal, or transferring funds. The NOW account, also known as negotiable order of withdrawal, which does pay interest, but typically requires a large minimum balance. There are special types of checks.
Interesting. No one actually backs up the U.S. money supply.
Well, a lot of people think that gold and silver do, but they actually do not. Currency and checking accounts do because they are widely accepted in payments for goods and services. We accept money in exchange because we are confident that others will be willing to accept the money when we spend it. But simply, money is anything that we generally accept as a medium of exchange.
Well, how do you measure this money supply?
We measure currency in the hands of the public, demand deposits, other checkable deposits, and traveler's checks. M1 equals currency in the hands of the public plus demand deposits plus other checkable deposits plus traveler's checks.
Well, thank you for your time, sir.
Thank you.
Back to you, Derek.
Thanks, Blaine, for that incredible interview on U.S. money supply. Now we're going to Blake Veerling, who's at Bank of America for a special interview on the banking system. Banks are financial institutions that issue a variety of checking or savings accounts and use the funds to make consumer, business, and mortgage loans. An alternative way to channel funds from savers to borrowers would be to establish banks. Such institutions pull the funds of many small depositors and lend them to larger borrowers. With savings accounts, you can make withdrawals, but you do not have the flexibility of using checks to do so. With a passbook savings account, you receive a record book to which your deposit and withdrawals are entered to keep track of your transactions. What is the interest rate? Can the rate be changed after the account is opened? Does the interest rate differ with how much money is in the account? How often is the interest compounded? In other words, when does the institution start paying interest on the interest you've already earned?
What is the minimum balance required before you begin earning interest? When do you start earning interest? The day of the account being opened? Later when the institution receives a credit card for the check?
Will you pay a flat monthly fee if your account balance drops below a certain amount? Is there a charge for every deposit and withdrawal made from ATMs? How much will ordering checks cost? What is the charge for writing a check that bounces?